It's a bad joke. Dropped at the first sign of trouble. They're only as good as the world allows them to be. I'll show you. When the chips are down, these civilized people, they'll eat each other. See, I'm not a monster. I'm just ahead of the curve.
Welcome to Market Makers, everybody. Your home for tomorrow's TA today. Often imitated, never replicated. If you watched this video pod last week, guys, I gave you the top to short the marketplace, posted that trade on the Discord, and of course, we bounced off the 50 on the S&P, on the NASDAQ, on the Eurostoxx 50, on the DAX, all around the world, the same big dumb money trading these markets to the same price points, and we had our rebound. I posted new trades on the NASDAQ and the S&P, both of which are already in profit off the rip up this morning and now the dump at the time of this recording. So we're going to look at the key levels in the marketplace because Bitcoin's still holding up pretty good. Crypto's overall holding up pretty good. Lots of volatility in the equity markets. And you might look at the charts and say, but Brendan, I don't understand. The DXY is falling. Yields are way down on the 10-year. Why isn't the market rallying? And I would say, well, Joe Sixpack, that's a good question. And the answer to that question is because the economic data is shit. Last week, we saw with the new data that came out, the consumer is slowing down. The consumer is 70% of GDP. They have over a trillion in credit card debt, 17 trillion in consumer debt. And then today, ISM Manufacturing came out. It was supposed to come out at a 50, needs to be above 50 to be in expansion territory, meaning economy strong. It came in at 48, weaker than expected, right? So when does that shift happen? Bad news is bad news. Good news is good news. Bad news is bad news when the market is priced to perfection, like this market right now. It is priced for a soft landing. Bullish sentiment on Wall Street, and a new survey Bloomberg put out this morning is over 90%, matching 2022, January of 2022, when Tom Lee famously came out and said this is a generational buying opportunity on a dip in the S&P. And what happened? Bitcoin fell 75%. Tom Lee had a 250K target. Bitcoin went to 15.5. The S&P fell 28%. The NASDAQ fell 38%. Now, that's not what I'm looking for right here, as you know, because why? We are tracking to the fractal pattern within a day or two on the candles. It's absolutely amazing. You only get that information on this channel. So be sure to like and subscribe if you enjoy this content. Guys, if you want to trade these markets, if you want to use no VPN, no KYC, and trade crypto, check out Bitunix. Get a special market makers bonus. That link is in the video description. And of course, if you live in just about every other country in the world, you can trade on SimpleFX, a fantastic exchange where you can also trade the commodities, the equities, the cryptos, everything. That link in the video description as well with our special market makers bonus. Guys, consider checking out our Discord. Would love to see you there. Lee, without further ado, let's start the show. All right, guys, let's start off on the 10-year. Look at the 10-year plummeting. Now, we need to pay attention to a couple of key things here on the 10-year. First of all, you have a key three-wave pattern that formed. Long-term viewers of this channel know what I'm about to show you, but you have a double top, right? This is commonly called a double top, but here you go, right? We came right up to the fib right here, 4.63. We got rejected. The 10-year is at 4.41 right now. Now, remember, what are yields? Yields price in future inflation and growth expectations, and the economic data is bad. So because of the economic data being bad, you're having yields plummet. Even though auction demand is weak, you're going to see volatility up and down. But ultimately, you will see a capitulation event when yields realize the recession is definitely coming in, you will see yields fall and you will see the market follow. This is a volatility event right now, right? Right now, this is what's happening in the marketplace, but you're at 4.41. If you break this double top, you're going lower, okay? If you break this double top, so you want to hold that 4.33. If you break it, then watch 4.11 because that's where you're coming down to. Be interesting to see how the equity market reacts, how crypto reacts. We're going to go over those levels in this video. If you look at the DXY, we broke below our trend line. Could just be a false break. We'll see if we can bounce back up, but you're at 104.235. Right? So the dollar's weaker, yields are weaker, markets are weaker because the economy is weaker. If you look at the Dow, big sell off. It had a big 500 plus point gain on Friday, and now you're down 423 points, which I would anticipate will accelerate going into power hour at the end of the day. Want to watch your lows. Remember, divergence, right? Dow transports are down. Key tenet in Dow theory. They have to confirm each other. If you're making new highs in the Dow, then you should have the transports also making new highs. You have key divergence there, well below your 50. You're coming back down to test your lows. If this starts breaking down beneath this massive three-wave double top, this M structure that formed, then watch the 200 because that's a likely target at 36, almost 37,000, okay? That would be a likely target there on the Dow. If it just bounces off the neckline, falls back down the retrace to this fractal at 37.5, that's still a negative event, but you want to see if it can hold that support. That'll be key support for this to hold. If we look at the euro dollar, how's this affecting the euro dollar? Now, this is kind of surprising. You have a bullish candle, 1.089. We talked about this being a key resistance level, and it's still being a key resistance level. But the ECB meets Thursday, and the ECB has basically been forecasting and out there talking about, and Lagarde has much said so, that they're going to be cutting rates, which should mean the euro would fall, but the dollar's falling right now. So the euro is kind of stable, but this is going back to February of 2023. Lots of chop, right? Lots of chop in here. At some point, this is going to break one way or the other. It's going to break below 107 or it's going to break above 110. We'll see which way this goes. But again, key event with the ECB is on Thursday. If we look at the fractal, guys, how closely are we tracking to the fractal? Look at this, 35 bars, 50 days from the origin point of wave one to the peak in wave two, 35 bars, 50 days. What about current market? 38 bars, 52 days. Not only 52 days, but it was a full moon on that day. Clean sweep fractal. If you watch my last video, clean sweep fractal and bearish engulfing bar. Only one other time in the last year did that happen, right before this 10, 11% retracement in the S&P. We got it right here as well. So we're looking for this to retrace further down. We're going to look at this on the charts. Where could this go? Well, let's go ahead and look at this right now. If we continue to track to the fractal as we have been, first of all, let's look at the timing. Time is more important than price. Go up to wave two here. Let's bring it down to wave three. 13 bars, 19 days. Let's do the same thing here. If this is our high, which is the all-time high, 13 bars, 19 days, 13 bars, 20 days takes you to June 12th. Why is June 12th a key date? This is a key date, guys, because we have the Fed meeting on June 12th. We also have the CPI coming out on June 12th. Talk about if we start to accelerate to the downside and we make a bottom on June 12th because maybe inflation data is showing it's still in line or slightly cooling because the economy's slowing, that could easily be your bottom for this wave three, and then you rally back up, right? So that would look something like this. We continue our decline. We'll go over the targets in a second. Continue our decline. Then we bounce back up with the Fed with a dovish, cuckish Powell. He bounces the market back up. And that's either our three-wave retracement, right? That can either be our three-wave retracement of wave one, wave two, wave three, or we come back up to that top and then sell back off again, and we do a five-wave retracement just like we did July high to the October low of 2023. So tracking to the fractal within what? Within 3 bars, 2 days, right? Within 2 days, tracking to the exact same fractal. Absolutely amazing. You only get that here, guys. Let's look at some actual targets then. Where are we looking at here? Well, the key level you want to hold, our last short we talked about last week was up here at the all-time high. We got a nice 120 plus point drop, bounced right off the 50, came back up. And did we hit any key fibs? Yes, of course we did. We bounced right up to the 618. Look at that, just above the 618 at 53.06. We got to 53.13, and now you're getting some retracement. So does this have to come back down and test the neckline? It doesn't. It could start going back up again, right? This is all part of trading. But when we're looking at this, we bounce off the 50. If the fractal continues to play out, then there's some key levels that have to get taken out. You have to take out this soon to be fractal here on the daily time frame of 5200. That gets you below the 50. Then you have lower level targets. So we look at these targets. Let's do this a couple ways. Let's pull a trend based fib. If this is the high, which we don't know, but let's assume that it is. If that's the high right now on this rebound back up to 53.13, market symmetry would tell you you're going to 51.50. Okay. Market symmetry would say you break below the 50, you're going to 51.50. We take a Fibonacci retracement. Here's our W pattern. We pull this up off the impulsive leg here. Look at your 618, 51.63. Lines up really nicely with 51.50. So I'll be looking for a move to 51.50 for the next target. And if you were to go deeper than that, then you're looking at basically 5100. Obviously, we have deeper levels based off that larger fractal pattern. But again, trading, being a short-term trader, we're looking for these profitable moves in the market. The first key step is take out the 50 on the daily, come down to 51.50, then reassess. Maybe take profits, trade, let it bounce back up and then get a better entry, or see if it just breaks right through it. But that's what I'm watching here on ES. This is the S&P. Money flow is basically neutral, still in the bullish territory. Momentum is bearish. So that's what you have. 52.61. Watch power hour, see if we sell off some more or if we rebound here towards the end of the day. If we go to NQ for the NASDAQ, 18.513, did the exact same move, guys. Exact same move. We pumped up just above the 618, got the bad economic data, sold back off, right? This is after that nice rebound, bouncing off the 50 on Friday. And this is where we're at right now. So 18,507. Let's look at the same thing. We have our W pattern. For those of you that are new, we have the W pattern here on the base, right? So we got our W. We have our three-wave double top that may have formed up here as well. I'll draw that here on the NASDAQ. Doesn't matter where we put this origin point from, but here's your all-time high. There's your neckline, and this could be the new high for the second top. We'll see, or we could get a rebound and come up higher. But this is where we're at right now. So you have a three-wave pattern. If you come down and break point B, which is a 50-day moving average, just like the ES, you will have more downside. So let's look at that downside. Let's do the same thing. Let's take a trend-based fib. Let's go off the all-time high. Come down to the neckline. Assume that for now, anyways, this is obviously the peak of the second top on the daily time frame. Takes you down to 17,973, almost retesting the midpoint here in your W pattern. Let's get some confluence with this. Fib retracement off the impulse leg here, off the W, up to your all-time high, 618 at 18. So 17,973. 18,011. That's where I think the next stop is, 18,000 points. If you can fall and take out the 50 on this next wave down, come to this level, reassess, see if we bounce and see what happens. But I think you're at least getting this last move down, at least, right? So you have your M that formed. If this breaks down, I think you're coming down to at least this level. And if we continue to break down, then we have that larger fractal pattern, guys, that has deeper targets, 4,800 going back to your December highs for the S&P, and that means the NASDAQ obviously would be going deeper as well. But take it a leg at a time. Check the indicators real quick, and we shall move on. MFI is neutral. Momentum is bearish. Basically, this is a daily time frame. So basically same as ES. Looking at the Russell, the small caps that Wall Street's so orgasmic about, small caps don't perform well in weak economic conditions. They're very economically sensitive. 43% of them don't make any money at all. They are zombie companies. You're at 2057. So if you break your three-wave double top that you formed, I mean, you have multiple patterns here, guys. You have a large three-wave double top. You see this? So you have this large three-wave double top, which you're trying to see if you can break down. And you also have the new three-wave double top that formed right here. Okay. So if you break this neckline down here at what's that price? That price is 2031. Then look for this to come lower as well. Some supports underneath you. 2024 and a key support just psychological as well will be 2000. You're at 2057. Moving forward, what's this mean for Bitcoin? Bitcoin came up to the 786, pulling a fib retracement from the all-time high down to your low here, the structure, this topping structure, and you came up to the 786 at 70,136. I told you before, I like it better up here at the 886, 71, 868. Why? Because we had these fantastic trades up here, right? Look at this. I mean, this has just been really nice. So I like to see Bitcoin come up, especially if the markets do break those necklines and start selling off. If Bitcoin does one of those last minute short squeezes, I'd love to see it come up between the 786, 886, because I think it's going to retrace with the markets if they break down deeper. Because right now, I mean, just look at the chart. The chart tells you the story. It's holding up rather well, is it not? It's holding up rather well. It's in the mid range. It's not in the bearish side. It's not in the super bullish side. It's in the mid range as reflected here with the fractal corridors, right? So we talk about this over and over every single week, but we have, this is my neutral range. This is where Bitcoin is now, my bearish range, and this is the bullish range. Okay, so we're in the neutral range, but you want to watch for what patterns may present themselves because you get good trades, whether this moves up or down. Let's check out the indicators real quick. Looking at Bitcoin, momentum is just starting to cross bullishly here on the across the midline. And then my PPO, percentage price oscillator. Looking at this, you don't have a bullish cross yet, but it's getting pretty close. So again, market selling off a little bit. Bitcoin is still neutral. It sold off its high, obviously, but I want to see some type of pattern present itself. Let's just look at this really quickly, like on an 8-hour, and see what we got. I mean, just you got a lot of chop, right? So again, that key resistance, that 71,850 is more interesting to me. I don't like floating here in the range, like especially with Bitcoin, especially with highly volatile assets. I like to trade at extremes, right? I want to trade at an extreme, not like mid-range. I either want to see this start breaking down or start moving up and find resistance. I don't like it here from these larger time frames perspectives. I'm sure there's tons of trades in the smaller time frames. So look at Solana. Same story, guys. You're still holding above 159. You're at 164. You got as high as 189 once again. You have a three-wave double top that formed. We'll see which way these markets all start to break because this can always break, as I showed you last week, into a W pattern to more upside where we can get another target. And that target could be as high as 270 if this thing was to break out, right? You can see the 1618 up there. Do I think that's likely? No, because I think the markets are retracing, and I think Solana and Bitcoin will follow suit. Now, if they hold these structures, come back down to the neckline, and that's all they do, that's really good because crypto should be moving at a beta to the S&P and NASDAQ. So we'll see how it plays out over the next week. Again, lots of economic data. Looking at Ethereum, you're still stuck in the same range, 3701, 3911. You're at 3775. Again, floating in the middle. Nothing for me to do here. My suggestion would be just be patient. Momentum, bearish. Yeah, you're still bearish. You're just floating. So I would just wait and see what happens. 8-hour time frame. I don't see anything here. Just some side-by-side stacking candles consolidation. Looking at the DAX was on a ripper this morning. It was up a couple hundred points. Now it's only up 47 points. But, I was looking for this move, and we have the ECB cutting rates. This is a three-wave double top. If we come back up around that 18.9 level, we have the ECB. I mean, unless they back off, right? If they don't cut rates after basically saying they were going to cut rates because Germany's inflation came in higher than expected, if they don't cut rates, you could see the markets reprice and sell off even more because again, these markets are all priced to perfection. 18,582. You want to watch that you don't take out your low here. So your low is at the B point of this three-wave double top, 18,432. If you take that out, you're going to have some more downside. But if you can hold this area and wait and see what the ECB does, I'm sure if they cut, at least initially, you'll have that euphoric response and some pop to the upside. Watch 18,922 for some key resistance. If we look at the FTSE did, guys, what we've been talking about the last couple of weeks, right? We got to the 2618, 8438. We go ahead and take that off. And what did I tell you to wait and do? I said, wait for the bounce back up to the 618 or 786, which you got above 8,360. So again, all these markets, you're looking at them presenting in three-wave double tops, M patterns, right? Will it hold or will it start breaking down? That's the key, and that's where we're at. Because if you can hold, right? If you can hold and do something like this, make a higher low, come back up, that's how you get your upside. A lot of that's going to be dictated with what happens with the US market. The big driver across the globe is the US market. So key resistance was 8,374. See if you can hold up above your low, above 81.51, and watch these patterns. Give them time to present themselves because they will give you good trades. Looking at gold, it's still neutral here. You have an up day right now, not much, $8, $9, but you're going sideways. You do have a three-wave double top that formed as well. So the key level you'd want to watch here on gold, if it continues to track with the S&P, 2,277, right? 3-day chart here, 2,277, you're at 2,347. You come down to this level, you need to hold that neckline or you will decline further. Talked about targets before, guys, down here in the 2,200 range, 2,150 range in this cluster. And if you lose that, then you need to watch the ceiling, your multi-year, 3-4 year ceiling right at 2069. But right now, nothing to fear in that sense because you're just kind of floating at 2350. Silver here on the 8-hour chart came up to key resistance at 3226, going sideways. You see your M pattern that formed. You came down, you tested your neckline, got some demand back to the upside. 1618 was at 2990. You bounced right back off of it. So again, chop. You got an M pattern. See if you break below it and sell back off, or if you can hold above it, that will be key. Guys, hope you enjoyed this video. Hope you consider checking out the Discord. Lee's Telegram is in the not the comment section, the video description if you have any questions as well. I answer all your comments as always. Give me a follow on X. I'll talk to you in the next video. Take care, everybody.